Hello, I'm John Everington, the Middle East and Africa editor for The Banker. As The Banker celebrates its 95th anniversary this year, I'm delighted to be joined today from Dubai by Mohamed Damak, Global Head of Islamic Finance at S&P Global Ratings. Mohamed, thanks so much for talking to us today.
Thank you for having me.
How have banks in the Middle East weathered the storm of the pandemic in 2020, and what's in store for them in 2021?
Today, a quarter of our ratings in the region have a negative outlook. When you compare that with 2019, we were at 8% at year end. Now, in terms of expectation, we expect lending growth to remain muted. The only exception here is Saudi Arabia, where mortgages have been expanding rapidly on the back of the government initiative to increase home ownership in the country. Now, to put a number, I would say around 5% on average and higher for Saudi Arabia. Cost of risk, I think, will continue to increase as the regulatory forbearance measures that were put in place by the various central bank in order to control for the impact of COVID-19 start to be lifted. At mid-year 2020, we haven't really seen the deterioration of the NPL figures. If you look at the average for the top 45 banks in the region, it was around 3.7% versus 3.2% at year end 2019. We expect this ratio to increase. We think it's going to reach something around 5 to 6%, while the coverage ratio will be around 80 to 100% compared with 140% at mid-year. And the main driver of the deterioration would be the SMEs, the real estate and construction, the hospitality, and the consumer-related sector. Now, shifting to profitability, profitability will continue to deteriorate. I think few banks will be reporting losses this year because of their high exposure to high-risk asset classes, such as SMEs. And because of also for some of them of under provisioning. And that will push the management teams to look more carefully at costs and try to leverage all the opportunities related to fintech and reduce also the number of physical branches. 2 points that I wanted to make at the end. First of them is funding and liquidity, which continue to be good with limited use of wholesale funding sources. The exception there is Qatar, because the contribution of external funding in the Qatari banking system is quite significant and has been increasing. And capital, which is the second the second positive point, which remains strong with an average Tier 1 ratio of about 17% for the top 45 banks in the GCC.
We're expecting to see a pickup in the issuance of Sukuk in 2021, I think. But what are the other main trends within Islamic finance we can expect to see within the coming years, would you say?
We think that the global Islamic finance industry will return to slow growth in both 2020 and 2021 after a strong performance it had in 2019. That strong performance was explained by the Sukuk market. And the reason why we think there will be a slowdown, it's because of the significant slowdown of the core Islamic finance economies because of the measures that were implemented by the various governments in order to contain for the COVID-19 pandemic, and the expected mild recovery in 2021. In terms of Islamic banking, 2019, the industry had 6.6% growth. We think that 2020 and 2021 will see low to single-digit growth. This slowdown will be somewhat counterbalanced by the strong liquidity injection from the various central banks to help the banking system to navigate through the difficult environment because of COVID-19. Now, on the Sukuk side, the volume of issuance dropped into 2020 by 16% as the sovereigns turned to the conventional instruments. Central banks and corporate reduced their issuance. The exception was the banks who wanted to benefit from the supportive market conditions and issue capital boosting instruments. Now, in 2021, assuming widespread immunization for certain countries by mid-year and oil price at $50, we think that there will be an improvement in 2021 in the volume of issuance. The current environment is creating an opportunity for accelerating and unlocking the long-term potential of the industry. I think stakeholders are realizing the importance of standardization, and some of the players are pushing this agenda forward, and we expect to see some developments in 2021 and 2022. Lockdown measures have shown the importance of leveraging technology and creating an industry that is more agile. And we think that social and green sukuk issuance are something that could help achieving that, although we think that the overall volume of issuance will remain limited.
Indeed. I mean, this is a subject that we've discussed before about particularly the social side of Islamic finance coming to the fore, in addition to the environmental side with the green sukuk sector as well. Fantastic. And then finally, Mohamed, for the moment, the other significant trend we've seen around the Middle East for the past 5 years in particular has been the rise of the mega mergers, creating some new giants within the region, particularly within the UAE and to a certain extent within Saudi Arabia. Is this trend set to continue in 2021 and beyond, do you think? Or do you think that we're near the end of this particular cycle of deals, do you think?
I think we've observed this trend over the past decade or so, which is, in fact, the way we see it is that bank shareholders have been reorganizing their assets through the consolidation of the banks. And that goes back to the days of the creation of Emirates National Bank of Dubai, ENBD, almost a decade ago, till the more recent transactions like the three-way merger between ADCB, UAB, and Al Hilal. I think the common feature of all these transactions is that if you look at both sides of the table, you usually find the same shareholders, and that has helped. Now, with COVID-19 and the impact it's going to have on the profitability on the banks over the long term, we might see a different wave of consolidation. We might see a wave of consolidation that would involve consolidation across the different GCC countries, or, for example, in the UAE, a consolidation across the different Emirates. But that would require the management to clear the hurdles, like, for example, convincing the boards and the shareholders to accept to be diluted or to lose control over the assets. Now, that might be easier in an environment where you would have to recapitalize the bank, for example, but this is something that remains to be seen.
Thank you very much indeed, Mohamed, for sharing your thoughts today.
Thank you for having me.
Thank you very much for watching today. You can find more videos in the 95th anniversary series on our YouTube channel and at thebanker.com/video.